What's going on, everyone? I'm making this video short and sweet. This is going to be the first video on the series. I'm just going to be going over candlesticks. What is a candlestick? How can you read a candlestick? And how are they useful in the markets? The first thing that you're going to want to do is you're going to want to create a trading view account. Trading view is the primary, way you're actually going to see the charts, right? So once you load up Trading View, it's not going to look like this. Your essentially is going to say to sign up for an account. It's $0. It's free. You create an account. You get to a page like this. Once you get here, you just click on one of the charts on the side, and you press full chart. And now this is where it's going to be. If I were you guys, depending on whichever chart you pick, or once you start really getting into it, just get comfortable by just bookmarking it so that you don't have to go to that first page again. All right, cool. So once you do get into the charts, you're going to see that there's a whole bunch of, this is what it looks like. A whole bunch of ups, downs. My candlesticks have changed to a different color because for psychology reasons, we want to get rid of the thought that red means that you're making money, green means that you're making money, red means that you're losing money. Just think of the markets moving up and down. Okay. So there are two different kinds of candlesticks when you're looking at the market. Right, before we start getting into anything when it comes to strategies and all this stuff, we have to get down the basic anatomy of what a candlestick is. Okay, so within a candlestick, you're going to get four different things from the candlestick, right? So we have two different kinds of candlesticks. The green or the up candlestick means that it's bullish. Upwards, bullish, downwards, bearish. Just remember that upwards, bullish, downwards, bearish. Right? And within a bullish candlestick, you can get four different things. Alright, the bottom down here is the opening price. So when the market opens, this is where the bullish candlestick is going to start from, the bottom. Right? The top is the closing price. So after your specific time frame closes, in this case, say 5 minutes. After 5 minutes, this is where the price closed at, a bullish closing price on the candlestick. And within those 5 minutes, the price is going to fluctuate. It's going to fluctuate to the high. So at one point in time, that's where it was at its highest, and down here is its low. Right? Think of it like a snail, or you're walking in the snow. Right? You go outside, it's snow. It snows outside. When you plant your feet down on the ground, that is the opening. That's where you first started off, right? Say you're going to walk down the street, right? You're walking, you're leaving a trail. So maybe you might go further down the street, which would be like, creating your high. The foundation went down the street, and then you come back down and slope. So essentially, the price is just showing where it went. Right, or another analogy that I've seen used is a snail. Right, snails, wherever they go, they leave a slime track showing where they went. That's all these are. Right, all these wicks, they're called wicks. That's all these wicks are, showing where price went at one point in time. Right, and then on the opposing side over here, this is the bearish candlestick. Essentially the same thing, but it's in reverse. Instead of the opening price being at the bottom, as you start at the bottom, where you're going up, it closes at the top. With the bearish, it starts at the top. So that's the opening price. And then it moves around within the 5 minutes, and it closes down here at the bottom. Right? Again, got high up here and low down here. Alright. Now what else exactly can we get from looking at the candlesticks? We have time frames, right? So again, I used the analogy earlier that one candlestick equals, in a 5-minute time frame, one candlestick is where price went after 5 minutes, a day, a month, a week, from there. So while you're looking at the charts, you're going to go through the different time frames that you see on here, right? So for each candlestick that you see, that is 5 minutes, right? We move up to 15 minutes, right? Now you're gonna see that it kind of goes into less detail, because 3 of the 5 candlesticks makes one of the 15-minute candlestick. Same thing with 30. 2 of the 15 equals 1 of the 30. 2 of the 30 is the hour, 2 hours, 4 hours. You're going to see that the candlesticks are going to become, less and less as becoming more compact. So the lower you go down in a time frame, the more detail you're going to get. All right, so when it comes to actually looking at trades, looking to place trades, and trying to get the most detail you can out of them, when you're analyzing different entry spots and you're using your strategy to really come to a concise decision on why you're going to take that trade, you usually want to go in and go into more detail. So as you can see, the market consists of many upwards, downwards candlesticks. The first thing I want you to do to practice is I want you to go to a market or go to something, look at the candlesticks and just start analyzing them. Right? So for instance, we're going to start over here. This is our up bullish candlestick. We're kind of going to identify right here. This, ooh, get real close here. We got this right here. This was the opening price right here. Right? This was the closing price right here. This was the high. And this was the low. Right down here. Boom. There we go. Now you were able to identify one bullish candlestick, right? And then if you want to do the same thing, moving up to the next bearish one right here. Here, right here at this top would have been the opening price right here. Like I said, after 5 minutes, once this one closed, right here at the top, it opened right here and it went up. And this was the high at one point in time. This was the low, but it closed right here, and then it moved on to the next one, the open, and that's essentially what it is. Now, after understanding what exactly a candlestick is, how can we use this candlestick to find the trend of a chart? Right? I look at trends like a trend to understand where the market is heading to. Right? You have obviously you have 3 kinds of trends that can form. Right? You have the uptrend, downtrend, and a sideways trend. Okay. Now, if we were looking at a uptrend, for a trend to be created, you need peaks. Right? Peaks, you need highs, and you need lows. Right? It starts here, comes up, peak. This is the new high, and then for it to create a low, it needs what? Another peak. There's a new low. Up here, high, down here, low. High, low. And as you can see, it's creating its own, trend to the upside, up. And the same thing, the same analogy can be used with a downtrend. Right? So it starts here, it'll go down, create what? A low, high. Lower low, lower high. Lower low, lower high. Lower low, oops. Lower high, lower low. Essentially, that's all it is. So as soon as you can understand that when you're looking at trends, you're looking at things that create higher highs and higher lows, which means that the trend is making its way up, or lower lows and lower highs, and the trend is on its way down. Now we will go to the charts themselves, and we will start to identify some of these trends. Alright, so if we were to, this is the next thing I want you to practice. I want you to find a chart, and I want you to start identifying some of the trends, some lower highs and lower lows. Right, so for example, let's go right here. Let's look at this. Alright, we're looking at it. This seems to be a trend going up, so let's identify some of these things. Right, you come here. Okay, it's kind of following like a snake. Lower low, higher low, right down here, higher high. It comes down, higher low, up here, higher high, higher low, higher high. As you can see, then it starts moving its way sideways, and as it comes down here, now you see the trend is starting to make its way down. So let's identify this. It comes down, it comes down. As you can see, create a peak, lower low, lower high. It goes down, lower low, lower high. Keeps going down, lower low, lower high. Keeps going down, lower low. And as you see again, it starts to, it starts to make its way back up, and then obviously go straight. But that's just literally the absolute basics when it comes to identifying what a candlestick is and identifying a trend. So I want you to take the time to just go in and just start looking at candlesticks, kind of again almost like you're in an anatomy class, and just dissect all these different candlesticks, what they mean. And then after you get that understanding of what you're looking at when it comes to the candlesticks, open, close, high, lows, then I want you to start going into the charts themselves and start identifying trends, right? You're going to see that there's going to be hundreds, thousands of trends that can go on, kind of just get your practice. The more practice that you can get with these trends, the better it is going to be for the long term. It's going to help you with your process of becoming a skilled trader. So that'll be the end of this video. If there's anything else that you guys like for me to go in depth with, just leave it in the comments. If not, make sure you please get your practice in, as the next video we're going to be going more in depth of what exactly we're looking for while we're in the charts.